Raamdeo Agrawal, Joint MD at Motilal Oswal Financial, spoke exclusively with us, in fact with Nikunj, and Nikunj began by asking him about the stellar rally that we witnessed in the month of January.
Last year, we were hoping that markets will stabilize 4,700, then we tried to think that market will stabilize 4,500, and it was becoming hopeless. I mean, people were saying that it's just the start of the new Monday and things like that. So we were quite, the state of affair was very depressed. Now it's a, fresh change that in last one and a half months, just the start of the new year, and everything just went other way. Foreigners bought more than $3 billion worth of stuff in last 1 month. And that one single thing, foreigners buying, sustained buying, has changed everything in the stock market.
You think the gains will sustain?
Yeah, I mean, if foreigners' activity, if you think the start of the year is like this, I think there is a lot more for the rest of the year. Quite sure. I mean, it doesn't happen every day, every month, but it seems that they are in the mood to allocate a lot more to India. It is on us now with the budget and post-election and all, particularly budgets and whatever government action is there, to sustain this flow and attractiveness of Indian markets. They are saying that we are very keen to come to India and we are allocating it upfront. Please take care of us. So I think in the budget, people will watch very closely budget and more particularly the government action. How do they govern post-election, so-called mini-election we have right now.
Do you think the strength in Indian market is more like a global phenomenon, because just about every major asset class has appreciated quite smartly this year, starting from crude to cocoa and starting from Indonesian stocks to Indian stocks? It's not local, but it is global liquidity which is making all the difference.
Clearly somewhere the global liquidity is flowing towards emerging markets, and all the emerging markets are up. All asset classes, as you said, is also doing very well. So clearly, but it's just not a January 2012 phenomenon. I mean, this particular thing will continue in the same kind of trend for next 12 months, or maybe it may even accelerate as we go forward into the second half. But my sense is that yes, it is synchronized global all asset class kind of movement. But the levels which we had gone to, that needed this kind of uplift, and it has come as a big relief. And if we follow with good policies through budgets and with other actions, this can put us distinctly in a different position in the world markets compared to other countries.
So based on how Q3 numbers have come out and how global macro fundamentals are stacked up, what to your mind is the correct level for Indian markets?
See, the only way I look at what should be the level is one is that P multiple. So this year we are going to do about 1110 kind of rupees EPS, and next year we're talking about closer to 1220 rupees kind of EPS. Now, as we come closer, we'll realize that maybe 1200 plus is not possible. It could be around 1200. So even if you take as a bear case of 1200 for next year, then it can sustain about 18,000, which is now close to this kind of thing. So this is the kind of a mean level of 18,000. You can go to test maybe the all-time high 21,000, and on the downside we have seen about 16,000. So that becomes 15 to 20,000 becomes the range. Currently, probably we are very fairly priced.
So indirectly, the bear market is now over for India.
It's too early to say. I mean, just 1 month back we were calling the end of the markets, and today somewhat it is a little more positive. But the bears are hiding, and any kind of weakness, sustained weakness by foreigners in terms of whatever happens in the world, whatever happens in India, and they withdraw their purchases. Clearly, bears are waiting there to make their bucks.
Do you think buy and hold, a strategy which normally works in a bull market, may not work for 2012? Because 2012, the fundamentals are not strong, liquidity is still high. We will get a trading rally, but if you don't cash on that trading rally, markets could come down again.
Yeah, so buy and hold is not a yearly phenomenon. It's a style, I mean,
your style. My
style, or so you have to practice it for very long. Hold means you got to hold it for 3, 5, 10, 15 years. So half year or 1 year keeps coming and going. It's a series of 1 years into buying and holding for 10 years. Because what you're buying is pieces of businesses, And you must buy the business of which you think the next 10-15 years going to be very prosperous. So economic fundamentals for long term is very good. You bought it today, maybe you bought it at a reasonable price. At times you buy it very low price, and at times you buy a little more expensive. But on a 10-year, 15-year holding period, it doesn't matter if you have bought it little cheap, and if you have bought it a little more expensive. The point is whether prosperity of that organization comes or not. If the prosperity of that organization happens, then you'll also be prosperous, because you are going to make only that much money as much as that company is going to make. So I think the whole issue is whether the corporations are going to make money or not. But coming to your question of 2012, whether this strategy will work or that strategy, I think the companies which are going to make money are the companies which are going to do well in the market. It's really difficult, like say Can India, we talked earlier about it. So it is a B2B, they sell it to refiners and all. But it clearly has a whatever oil price is there. They were exposed to the currency also. So currency is also weak. So they're not only making out of volume. Volume is going from 125,000 to 150 to 240. They have quite ambitious volume targets in next to 3 years. Currency is weaker.
So even though Can India, and my compliments, it was a great call, you identified that for Abi was closer to 300, it's at 360, 370. Yeah. Are you tempted to book profits, or that's not your style?
No, that's, buy and hold means you have to hold till it goes to 300, 400,000, and Vedanta Group, they also paid the same price. So their game is yet to start. They have to show that they add value to the whole thing. And what they will do will be known only in next 2 3 years.
So looking at the way how business dynamics are shaping up for Can India and the kind of policy regime we are in, you are okay with holding Can India for next 5 years?
Looks like. I would keep holding till I'm negatively surprised or things don't happen the way I thought.
As of now, things are moving as
things are happening the way I thought, and people are as negative on the company as always.
After the 2G verdict, is Bharti a clear buy now?
Yeah, actually 2G verdict has not changed much for the Bharti, because what you want is complete reduction in the competition. There's no other way to make money in commoditized 2G market voice space. So we have about 8, 10, 12 kind of players, but every circle has at least 6, 7 very viable large players, and unfortunately they're all so big that they don't want to give in so easily. You have Tata Birla, Ambani, you have Vodafone, you have Telenor, then so all the big names are there, and everybody has a parent which can back up with fairly large amount of loss capital, which is happening. So I think it will be a very well thought out, prolonged kind of battle where consolidation will come late in the game, not so early. The moment people see $1 billion loss in a year, I think they start folding up. They start looking at exit strategy. But here people seem to be very patient, and they want to see the internet, wireless internet coming up, consumer flocking to the telecom market, and it's kind of who blinks first kind of situation where one loss-making guy thinks that other guy is weak, so he will give in, and then this three Bharti, Idea and Vodafone, they are the guys with a positive cash flow, so they have a kind of unlimited staying power, so to say, and then these 3-4 loss-making guys who seem to have unlimited balance sheet from the parent to support the Indian operation. So who will give in, and in what shape the existing guys like Bharti and all are left out here in terms of pricing? Only time will tell. Some kind of floor being set on the pricing that in the competition that nobody will sell for less than say 60 paisa per minute. You can keep fighting about market share, but not to have a price below that. That kind of arrangement, if it arrives, like we see some kind of arrangement in some other businesses, so that could help, but it doesn't seem that kind of thing happening in the short while. So I would think that some kind of consolidation in the current shape, I don't see emerging very quickly.
So 380, you would say Bharti is fairly valued and it's too early to bet big on Bharti?
I would think so.
The other pocket which has appreciated very smartly is the entire financial space, starting from State Bank of India all the way down to Dena Bank, all the way up to Central Bank. Are banks now fairly priced? Because there were a lot of NPA concerns. Thankfully, the script has not played out as what markets were expecting.
The banks are kind of meant to take business risk in their balance sheet, and that's how they charge 3%, 4% spread between borrowing and lending. So the risk is visible only in the stressful times like this. So the good banks, very good banker would avoid the risk, would take the risk in such a way that it never materializes. So that's the kind of the best banker, not to have any stress or credit cost even in at this point of time, but with the best bank, I would say. So HDFC Bank has not changed its profile of.
You still like HDFC Bank?
Yeah, it's a fantastic bank, and I think that it's like an FMCG stock, like it's evergreen kind of bank, which is growing at let's say 2 times the industry. If industry is growing at 15%, they are growing at about 30-32%. Without any problem, and still they are fairly small in a way. They are 3-4% of the entire banking system, though they are the best. So I think they'll keep growing for quite some time at a much higher than the industry rate. 20-25% should not be a problem for them.
Central Bank, SBI, are they both hold or are they both buy also at these levels?
I would think if you don't have enough in your books, this is the time to buy.
After Kane India, are there any large cap stocks you've added in your personal portfolio?
No, actually I have not done anything in last 1 month. I'm just watching the firework in the marketplace, and I'm just thinking, what should one, once it settles down, somewhere it will stagnate, or if I get any idea, any insight into any company, then I'll start buying. Levels don't matter. 53, 54 is not uncomfortable level to buy if you like a stock.
What's on your radar? What essentially are the themes you are chasing?
I'm looking for businesses which have pricing power and which I understand. Basically, first thing is I must understand, and second is that it should have a good pricing power. So I'm looking for businesses which I understand and which has long-term pricing power, and which is not, given the growth levels, which is not kind of crazily priced. You have Asian Paints, you have Bata India, you have Marico, even Lever. So they are terrific companies, but they have pricing power, but the valuations are at about 30-35 times for given 15-17% kind of growth. So I'm yet to get kind of aligned to any one of them to be confidently saying that okay, let's look at 5-10% of the portfolio.
In December, when we interacted with you, you were a buyer. After a 20% run-up, are you a seller or are you in a wait-and-watch mode?
If you ask me what I'm doing, I'm waiting and watching, clearly. So let's be honest. But I'm very active. I was even at 4,500, I was actively looking for ideas, and I was buying some of them. Today, those stocks are appreciated, as you said, by 20-30%. So I'm on the kind of hold. But any insight today, say McLeod Russell. The stock is at the same level. It has not rallied by 20%. But any insight into what is going to be the price, because I'm waiting for the price of tea to, upsurge in next 1 year or 2 years. So whenever I get the tightness coming into the tea market, or if I get an insight from somewhere by reading some newspaper that yes, this is going to happen, I'll go and buy. I'll increase my position.